Hello everyone. We are going to continue with chapter 7, Dissolution of Partnership Firm, from part 1, 12th Commerce. As you all know that we have been doing a sum from an exercise which is question 5, and in the previous lecture we have completed 5 transactions for the same. All right. So I hope that you have studied the previous lecture very well, and today we are going to continue with the same question from exercise, and this is the second lecture regarding the same. Second lecture related to sum number 5. I repeat that we have completed 5 transactions for the same, and we are going to continue with the same sum. So previous lecture was the first lecture from for exercise, and this is the second lecture. You should watch this video lecture till end for complete understanding. Okay, so the question is given on page number 311 of your textbook, and of course this is question number 5. And we are going to start with the 6th transaction. It says a partner has accepted to pay loan of his Srimati rupees 40,000 which was given to the firm. Now, loan was given by his Srimati of rupees 40,000. Yes, and the partner says that he will pay the amount of loan. So loan is having a basic balance of credit. Now that the amount of loan is paid, so loan account is debited and partner's capital account is credited. This is the journal entry when the partner accepts to pay the loan of his Srimati. Alright. So the loan is worth rupees 40,000. Loan is repaid, hence it is being debited. Loan of Srimati account debit to partner's capital account. Alright. Narration you can check well in the given illustrations. I mean the illustrations that you are going to practice after watching this video lecture. So as I have instructed that you should go through narration very well so that you can write it down well during sums. Yes, although writing down narration is not at all a hard job. We have been writing narration since we were in 11th. Yes. So obviously whatever journal entry you have written for is just to be narrated in narration. Alright. Next transaction. Next question I mean. It says income tax liability is now payable rupees 30,000. It is not recorded in the book. First of all, this is a liability. It is income tax liability and it is payable rupees 30,000. And they say this is not recorded in the book. So this is the payment of unrecorded liability. I think we have understood the journal entry for the payment of unrecorded liability. Yes, we have clearly understood the payment of unrecorded liability, the journal entry. This is realization account debit to cash and bank account. While understanding the concept of journal entries, I have clearly explained that what is the journal entry for the payment of unrecorded liability. It is just similar to the journal entry for payment of liability. Yes? All right. So, the next question that arises in your mind related to this question is that, ma'am, why you did not write the closing journal entry for this liability? Understand, this is not recorded in the book. That means it does not appear, it is not disclosed in the balance sheet. So this simply means that this is not written on credit side of the balance sheet. Then how do you close this account if it does not appear anywhere in the books? Then how do you close this? If it hasn't been opened, you haven't shown that there is any such liability, then you cannot close this. Yes? This is the reason that we have just directly written the journal entry for the payment of this liability, which is 30,000. And this journal entry also we have understood while we were learning the concept of journal entries in previous lectures. That what is the journal entry for the payment of unrecorded liability. Alright? So it is realization account debit to cash and bank account. This is similar to the payment of journal entry for the payment of regular liabilities. Yes? Please go through all the journal entries thoroughly before you proceed with the practical sums. Yes? Alright. Let us see the next question. The 8th transaction, they say, after making payment of all liabilities and loan of partners of firm, surplus of assets is rupees 1,20,000. The profit and loss sharing ratio of partners A, B and C are 5:3:2. Understand? We have understood about the general procedure of payment. The procedure of payment. What do you pay first of all? The very first thing paid from the realization of assets is what? Do you remember? It is the payment of dissolution expense. We have understood this concept well in theory lectures. Yes? And I think in your textbook it is given on page number 278 if you are holding your textbook right now. Then please pay attention on page number 278 and the 6th point, distribution of assets, realization of firm. They say firstly the dissolution expense is paid, then liabilities are paid. So here it is, after making payment of all liabilities. And the third point, if you will consider, it is the loan of partners. So again in your question, they say loan of partners of firm. This is paid. So what is the next step? It is capital balances and current balances. And then there is the step of surplus. Yes, they say if there is any surplus, it is to be distributed in their profit loss sharing ratio. So what is the profit loss sharing ratio here? It is 5:3:2. Alright. So surplus of assets is 1,20,000. This surplus is to be distributed among partners in their profit loss sharing ratio, which is of 5:3:2. So let us check the journal entry for this. Yes, here the journal entry is, it says realization account debit 1,20,000. This is the amount of surplus and it is to be given to A, B and C. Yes, to be transferred to capital current account, again to the capital or current account of respective partners. And in what proportion? In their profit loss sharing proportion. The amount of surplus is 1,20,000. The profit sharing ratio is 5:3:2 if you see here on your screen. So if you distribute 1,20,000 into 5:3:2, the amount arrives is this. Alright. So this is a fixed journal entry for the distribution of amount of surplus among partners in their profit loss sharing ratio. Yes. Let us check the next transaction. We are about to complete this sum, which is absolutely simple and quite easy. So if you remember, while explaining the concept of journal entries, I clearly said that you must pay attention to these journal entries because these are applied in practical sums. So I still repeat, if you haven't studied the lectures related to journal entries, the previous lectures, then you must go thoroughly and only then you can understand this sum. Alright? Okay. So our next transaction says machine is disclosed in the book. Machine is an asset at the time of dissolution for rupees 2 lakh. Book value is realized. Now this is not a new transaction, it is quite simple. Machine is an asset and having book value of 2 lakh rupees, and they say book value is realized. Alright, so we have solved this type of transactions in the very beginning of this sum. Yes, so the first journal entry, if you can think about, will be of closing machine account. Yes, and then the journal entry for the sale of machine. Closing entry, the amount to be considered while writing down the closing journal entry for an asset is always is always a book value, which is 2 lakh rupees here. Alright. And again, book value is realized. That means the realizable value even is 2 lakh rupees. Okay. Fine then. Let us see the journal entry. Yes, the first journal entry is for closing machine account, realization account debit to machine account 2 lakh. The second journal entry is cash and bank account debit to realization account, again 2 lakh. Yes, this is the book value. This is also the book value and realizable value, because they said that book value is realized. Alright. I repeat, the first journal entry is for closing the asset account. It is realization account debit 2 lakh to machine account 2 lakh. Closing entry for assets. We have understood this and is also given on page number 280 in your textbook, and the concept says when assets are closed and transferred to realization account. Realization account debit to all the assets. You can also say sundry assets. Yes. Realization account debit to machine account 2 lakh. being asset account disclosed and transferred to realization account. The second journal entry is about the realization of machine. This is a common journal entry for the realization of assets. Yes, journal entry for the sale of asset is cash and bank account debit to realization account. And the journal entry for payment of liabilities is just opposite to this. It is, reverse. Realization account debit to cash and bank. Simple. So if you have memorized one concept about assets, you just have to reverse that concept in the case of liabilities. This is how you memorize. Yes, this is to be doing some sort of smart work. Yes, instead of mugging up things. Alright, so yes, let us continue. Okay, the next transaction we have reached to, it says one partner has accepted responsibility to undertake dissolution procedure. In the return of it, decided to pay remuneration of rupees 20,000. On account of expense, firm has paid rupees 12,000. Now this is the concept about dissolution. These journal entries also we have learned while learning the topic of journal entries related to the preparation of realization account. Yes. So these journal entries are given on page number 283. Yeah. So just for the sake of revision, if you need, I'm dictating the page number along with the similar type of transactions that appear while solving this sum, so that you can compare and you can understand this well. Okay, so let us see the journal entry for this. Realization account debit to partner's capital current account, which is 20,000. Realization account debit 20,000 to partner's capital current account 8,000 to cash and bank account 12,000. Here is the amount. Alright. Okay, so let us see the next transaction. Yes. There are debtors of 1,20,000 and creditors of rupees 60,000 at the time of dissolution of firm. So debtors are your assets, creditors are your liabilities. At the time of dissolution of firm, one partner has taken debtors at 20% less than its book value and has accepted to pay creditors. The question has not been written completely, I think, by mistake. So you can check this question in your textbook, page number 311. I repeat, page number 311. Exercise question 5, transaction number 11. It says accepted to pay creditors. Creditors has not been written here by mistake. So firstly, the very first thing that you are going to do is that you will close the accounts of assets and liabilities, and then you will write down the journal entry about the debtors being taken over by partner and the liability being accepted to pay by the partner. So here is the journal entry, closing entry for debtors and creditors. Yes, let us understand this first. What is the book value of debtors? 1,20,000. What is the book value of creditors? It is 60,000. Yes? Okay. So closing entry, realization account debit 1,20,000 to debtors account 1,20,000. Closing entry for assets, closing entry for a liability. Creditors is your liability, yes, just the way debtors are your assets. Yes. So realization account debit 1,20,000 to debtors account 1,20,000. This is the book value. All right. And this is also the book value. Creditors is having basic balance of credit, so it has been debited in the journal entry, which is the closing entry for a liability, and this is the closing entry for assets. Now what happens with debtors is that it is taken over by the partner. So partner's capital current account debit when an asset is taken over by the partner. This journal entry we have understood while understanding the concept of journal entries. When assets are sold, when any asset is taken over by the partner. If you have learned journal entries, then these sums are easy for you. Otherwise, it is difficult. Alright then. Partner's capital current account debit to realization account 96,000. It is taken at 20% less than its book value. What is the book value? 1,20,000. 20% for 1 lakh, sorry, it is taken at 20% less. So 1,20,000 minus the 20% for 1,20,000, 24,000. So this is the value at which the debtors are taken over by the partner. So 1,20,000 minus 24,000 gives you 96,000. Yes. And the partner has accepted to pay the creditors. When the partner accepts to pay the liability, this is the journal entry. Realization account debit 60,000 to partner's capital current account 60,000. Yes. This journal entry also I have explained while explaining the concept of payment of liabilities, or when a liability is accepted by the partner to pay. So the next journal entry, the next transaction, let us see. Okay. The profit loss sharing ratio between partners R, B and I is 3:2:1. Undertake the disposal of the following balances. Which is the first balance? Let us see. It is general reserve. Second is workman accident compensation fund, and third is debit balance of profit and loss account. So let us deal with the first one. General reserve is of rupees 18,000. Workman accident compensation fund is again of 18,000. And what is the profit sharing ratio? 3:2:1. So if you remember, the very first journal entry that we have understood is of distribution of reserves and accumulated profits, if I'm not wrong, and the credit balance of profit and loss account or debit balance. Yes, page number 279 in your textbook. I repeat, page number 279 in your textbook. General reserve account debit. Why general reserve account has been debited? Because general reserve is basically having credit balance in the balance sheet, So, when the amount of general reserve is to be given to the partners, general reserve account is to be debited and that account is being closed. Similarly, workman accident compensation fund account debit, which is basically credit. So when you will distribute this amount among the partners, you will debit it. You can also compare this with the journal entry that you have understood on page number 279. The first topic, reserves and credit balance of profit and loss account. There you will see reserve has been debited, workman accident compensation fund has been debited and has been credited to partners' capital accounts. Who are the partners? R, B and I. What ratio? 3:2:1. This amount has been distributed in the ratio of 3:2:1. Always the credit balance of reserves and credit balance of profit and loss account is to be distributed among partners in their profit loss sharing ratio. This is the first journal entry in the concept of journal entries that we have started, which is also given on page number 279 in your textbook. If you have learned these journal entries, then it is extremely easy for you to solve this type of sums. Alright? Okay, so let us see how to deal with the debit balance of profit and loss account, which is of 12,000. Now this is the debit balance. That means this is the loss. If the profit is distributed among partners, similarly the loss is to be written off among partners' capital accounts. Yes? Partners are supposed to bear the profit and loss both. So at the time of loss, partners' capital accounts are debited and profit and loss account is credited, because the loss is having basic balance debit. When you close this account, it is credited. And the loss is distributed among partners in their profit loss sharing ratio, which is 3:2:1. 12,000 is distributed in 3:2:1. Alright. So here I think we complete question 5 from your exercise. You will solve an illustration of same kind. In the previous lecture, your homework was first, second and third sum from illustration 1 and question 5 transactions. So after this lecture, you are going to finish question 5 from exercise, all the transactions up till 12, of which 5 you have already studied and I hope you have done in your fair book as well. And illustration 1 you are going to do it completely. So you will finish question 5 and illustration 1 in homework today. Yes? So that in the next session we can start with question number 6. Yes, and soon we'll finish this chapter and then we are going to start with part 2, the very first chapter in part 2. The reason behind instructing well in advance is that you should have your textbook with you in advance. Right now you must be having part 1 so that you can purchase, you should purchase part 2 in advance so that you don't face any difficulty while we begin with chapter 1 from part 2. So here we end our session for today. Hope you were able to understand. We'll see you all soon in the next session. Till then, stay home and study well.